Oh, well, yes, this is more of the same, to be honest, because we have seen downgrades coming in for the IT sector from the likes of Nirmal Bang, JP Morgan, Nomura already, and Jefferies is also joining the party and saying similar commentary. They've cut the target price anywhere between 20 to 45%, and they've cut their EPS by around 15% going forward, because they believe that the moderation in US economy will definitely have an impact back home as well. And in fact, they have cut their revenue targets for the coming 2 to 3 years by anywhere between 150 to 350 basis point, and that is what is driving the cuts on the bottom line as well. In fact, they say that along with the top line cuts that have happened, this will also create a PE derating cycle, and that's the reason PEs will also get compressed, and overall the valuations are expected to come down. This is the thesis, and that's the reason they have downgraded a whole host of counters as well. In fact, Infosys actually remains their top picks, and they're positive also on TCS, but they say that given the fact that TCS is trading at rich valuations, they are downgrading it to a hold now. Separately, as far as the overall ecosystem is concerned, they are more positive when it comes to the large cap IT companies, given the fact that the US companies are likely to consolidate their vendors and the larger companies tend to benefit. So the smaller ones, the likes of Mindtree, Coforge, are likely to lose out a lot more than what the frontline companies will lose out. In terms of the other stock specific action, well, they have downgraded HCLT to a hold now as well, because they don't like the higher exposure that the company has to ER&D services. TechM has also been downgraded to a hold because they believe that the 5G related spends are likely to be deferred. They have downgraded Wipro now all the way to underperform because the margins of the company hasn't been performing well. In fact, their acquisition spree has been eating into the margins, and that is something that Jefferies doesn't like. And as far as the broader markets is concerned, they believe that while L&T Infotech's revenue stream is better than other mid-sized company, the integration issues on account of the impending merger might create a bit of headwind. That's why they have downgraded the counter to underperform now, and they've also downgraded Coforge to underperform, given the fact that their client mining hasn't been that strong. So that's the reason a whole host of downgrades coming in, but it's actually more of the same demand headwinds that the street is worried about.